Hi everyone, we are live. My name is David Kosmeter. I'm the creator of TimingResearch.com, and this is our show for November 24th, 2014. We are going to be talking about the 61st weekly report, and I have Dave Landry again as my guest host. If you have not had a chance to look at today's report, just go to TimingResearch.com/reports, and I'm going to turn it over to Dave now.
Okay, thank you, David. I appreciate you inviting me back again this week, and thanks to TimingResearch.com. Looks like we've got a pretty good lineup today. We've got a full group here. We've got quite a few guys. Let's see, we've got Bennett McDowell from TradersCoach.com, John Nyaradi from WallStreetSector.com, and Stephen Place from InvestingWithOptions.com. Bennett, let's start with you. Tell us a little bit about yourself. Tell us a little bit about Traders Coach and what you guys do over there, and then at the end of the show, we'll get to hear a little bit more about your website too. But let's just start off for now with a general introduction and just a few things about TradersCoach.com. Can Bennett hear us?
Looks like he disappeared. So, he's signing back in now.
We scared him off already. Don't be shy, Bennett. You still there? Could you hear us? Okay, I tell you what, we'll come back to Bennett. Let's go to John. John Nyaradi from WallStreetSector.com.
Yeah.
Tell us a little bit about yourself and a little bit about what you do over there at Wall Street Sector.
Hi, Dave. Thanks. Yeah, it's WallStreetSectorSelector.com, and
Sector Selector. My apologies.
Yeah, there's no issues there. We specialize in ETF trading. We have several programs for leverage ETFs, standard ETFs, VIX ETFs. It's a financial media site. We publish lots of original content, some syndicated content. But we focus on global economic news and development. I wrote a book called Super Sectors, which was published by John Wiley and Son. And so what we're about is education and sector rotation and ETF trading.
Yeah, and that book is highly rated on Amazon. Whenever I log in, I see it up there. So congratulations on that. Some very good work that you've done there. Again, sorry about the website name.
No.
All right, let's go over to Stephen. Can you hear us yet?
Yes, I can hear you loud and clear.
Okay. All right, fantastic. Tell us a little bit about your website and tell us a little bit about what you do.
Sure.
I'm back in now. I think it's working.
I'm the founder and head trader at InvestingWithOptions.
I don't hear anybody.
And at IWO, what we do is teach people how to trade stock options so they can build wealth aggressively and sustainably. My style is a mix of directional trading through technical analysis along with understanding the volatility and options markets to get a further edge with knowing the right strategy to choose, what strategy to choose when trading options.
That sounds really interesting. Okay, let's try again with. Okay, what we got? We need to get.
Yeah, Bennett is having some technical difficulties, so he should be back in a second here.
Okay, I'll tell you what we'll do. We'll just we'll start with question number 2, and Bennett, when you can hear us, just chime in, and you can answer both questions at once. Okay, question 2 is based on any technical or fundamental indicators you want to use. What would you guess that the S&P index will? Will you guess that the S&P index will move higher or lower this week? And this is from where we are now till Friday's close. Okay, so let's see who's first up. Let's go with Bennett. Oh, he's
muted.
He's still muted. Okay. All right. Well, let's go with. Let's go ahead and go with John then.
Yeah, Dave. I think I would say marginally higher this week based on several things. It's going to be a light volume week. It's going to be easy for the large traders to move in the markets. They want this thing to go up, obviously.
Hey guys, I'm not sure if you can hear me. I can't hear you all, so I don't really know what you're asking, unfortunately. So I have somebody else logging in on another port, and hopefully they'll be able to relay the questions for me.
Okay, we can hear you, Bennett. But anyway, we cut John off. John, I like what you were pointing out, the fact that volume's going to be light, can be easily pushed around. I think that's a good point, and I'm glad you brought that up. This holiday trading around holidays could be kind of thin and choppy. Now let's get to the question. So you think that we're going to be higher by Friday?
Yeah, I'd say, looking at how it's going, seasonality is bullish. This is the best time of the year, the Halloween indicator, and then people will be looking at the Santa rally. Of course, everybody on Wall Street wants to pump up their bonuses, so the pressure is going to be higher.
Amen.
All the technical patterns look bullish, particularly after last week's surprise announcements by the ECB and the People's Bank of China. So that's how I see things for the short term.
Okay. And based on that, what would you get your confidence on a scale of 0 to 10?
Well, you don't want to be overconfident, but 6 or 7. I think the big question is, will there be follow through from last week's? This whole thing is being run by central bankers around the world, so lots of elation every time those announcements are made. The unknown is how much follow through there's going to be this week from last week's announcement. Again, I would expect higher this week, and then as the adrenaline wears off, we might see some different things later on.
Okay, I've got to nail you down on a 6 or a 7. Which one are you going to go with?
Okay, let's go 7.
All right, 7, fantastic. And quick question: you mentioned the Halloween. Is that a rally, or what type of seasonality are you seeing?
Yeah,
there?
that's all from Stock Traders Almanac. They do some really good work there. They have a lot of historical data. So the Halloween, you've heard of sell in May and go away. Well, that's the Halloween indicator is the opposite. From Halloween until Memorial Day tends to be the best 6 months of the year, and so we're already well into that period. And then right around now, this holiday period, you see the Santa rally, which is typically the year-end rally, of Christmas and New Year's, and just the general seasonality always points to this end of the year, fourth quarter being typically bullish for the markets.
Gotcha. And the
Yeah, you just blanked out of me there a little bit.
he said, not you, but that's a lot of good stuff in that book. Good book to have. All right, Stephen, you're up next. The question is, are we going to be higher or lower by the end of the week? And then give me your confidence rating on a scale of 0 to 10 on that.
Well, one of the beauties about making a market call right now is because we've only got 3 real good trading days, so you don't have a whole lot of time to work with, which means we can be a little bit more certain. With me, I am bullish. I am not necessarily bullish because I want to be. It's because I have to be. The overall trend is up. From a reversion standpoint, there is some evidence out there that we are due for a reversion, but when we see this continued addition of new fundamental catalysts to the upside with respect to the Bank of Japan and the China lending facility rate cut or something along those lines, it's incredibly difficult to make any kind of bearish call with this tape, even though, given the magnitude we've seen and the lack of reversion that we've seen over the past month, basically, it's kind of tricky right now. So I am bullish. I do think we end up higher here. Since there is no liquidity, we're probably going to see orders jammed into the end of the week, and we're probably going to see that rally higher. But my confidence is, it's about a 5 or a 6 right now, because I'm more bearish on volatility right now. I think we could be due for a time-based correction rather than a price-based correction.
Okay. Nail you down on that.
Let's say 6. One of the indicators that are really quick is what I've been watching is the number of consecutive days that the S&P 500 is currently above its 5-day moving average, and we are now at, I think, 27 days in a row that we're above our 5-day moving average. I've never seen that before.
That's amazing.
That just shows, yeah.
And neither has anyone else. And I like what you said about you're bullish because you have to be, not necessarily because you want to be. And then there has been no reversion to the mean in this market, and that's been fascinating. Now we have Bennett muted, or we're going to try to go to Bennett one more time.
Okay. Can you hear me?
David, you want to try to?
Can you hear me?
Okay. We can hear you loud and clear. Finally. Okay, I think we need to back up a little bit. Tell us a little bit about Traders Coach. Tell us a little bit about yourself, and then we'll get the survey.
Okay, sure. Thanks for bearing with me here. I don't know what happened with the audio, but it stopped, and then we got it working again. Well, TradersCoach.com. We started TradersCoach.com about 15 years ago, and primarily I was running a basically a hedge fund for high net worth individuals and doing a lot of trading. And it was really back then a place for people to come and get information on what I was doing. It was not a sales platform in any way, shape, or form. It was just a informative place for people that I was managing money for. And then it developed, software came to be really mainstream, and we converted my approach into a software program, and that's basically was the beginning of selling our software on the TradersCoach.com website. We also do consultations and home study courses as well. But that's just a quick run through of what we do here at TradersCoach.com.
Okay. Now, based on any technical and fundamental indicators you want to use, would you guess that the S&P is going to be higher or lower by the close of Friday? And then when you get after the answer to that, we need to your ranking on that on a scale of 0 to 10, 0 being unconfident and 10 being completely confident.
Absolutely. I agree with your previous speaker who said it was tricky, because it is tricky. We have 3 trading days really officially left in the week. I'm leaning towards being bullish for just simply because the trend from a technical standpoint is up. From a divergence or momentum standpoint, we're seeing higher prices in the S&P, and I'm focusing here on the 60-minute chart. We're seeing higher prices on the S&P, but some of the indicators that I use to judge momentum is that the momentum is decreasing. So that's your classic bearish divergence building since really the beginning of this move up since October 15th. So I'm looking for a correction. It could happen at any time, maybe next week, maybe this week. I doubt it. Usually the week right before a major holiday tends to be a little bit more bullish than other weeks. So I'm bullish towards this week. I'd say I have about a 6 on that. But I am looking for a correction, and I think probably, even if we make another high in the next week or so, we're getting closer and closer to a pullback. I don't think we're going to get a major change in trend. We've had 28 days in a row on the Dow that's been up since October 15th low. So we're due on that time frame as well for a correction, but I don't think it's going to be a change in a trend. I think we're going higher towards the end of 2014 and into 2015. Mid-2015, I'm a little bit concerned about, but I think probably the remainder of this week could be a good week.
Okay. Well, we'll get you back maybe in mid-2015 to see where we are then.
Yeah, I was going out a little too far, I guess, but.
Somebody mentioned, it was one of the guests, is that had more controversy, and looks like this week we don't have much controversy. I agree with all 3 of you guys. This is a market that keeps going up, and it should correct at some point in time. It should go down at some point in time. One thing that had me very concerned is the fact that we had this extremely low volatility situation, and we began to see a little bit of expansion out of that. And one thing that I don't do much mechanical testing anymore, but back when I did, I noticed and I observed and actually tested that sometimes that first move out, the market will move in one direction, and then you get a move in the opposite direction to that, and that'll actually, like I said, test out mechanically. But you can't fight this trend. I mean, last week or a week before, I pulled out my my trend arrow, and this is my little marquee arrow I acquired from an old guy who taught me a lot about the markets, and this was his secret weapon. And so far, it's pointing higher. I'm not going to fight the trend, so I'm going to say it's going to be higher next week, or by Friday, I should say. And I'm going to give that a confidence of about 7. The only thing that really scares me is everyone in here said it, and everybody else is saying it too. Everybody who's been around the block a time or two, and all 3 of you have, I know that, looking at your resumes, is that this is a seasonal good week. Usually the market drifts higher around Thanksgiving, and it usually closes the week on Friday higher. Rob Hannon was here last week. I dubbed it the turkey system. You buy the market when the turkey goes, right before the turkey goes in the oven on Wednesday or whatever, and then on Friday when you're sick of leftovers, you sell out or exit your position. Okay, so I'm going to go, David, if you're keeping score too, I'm going to go up with a confidence of 8 on that. Everything you guys said makes a lot of sense. At some point, we will have a reversion to the mean move. We will have a correction. The only other thing, not to filibuster, but the only other thing that concerns me too is this market has just pretty much gone up since 2009, and corrections have not rolled over. We had some pretty significant possible rollovers. We had some sell signals, and none of them really panned out, and the market is going straight back up. And I think one of these times it's not going to happen. But like Bennett, let's not worry about that until the middle of 2015. Okay, I think we go to question number 1 on the survey. David, am I correct? Is that where we are, question 1?
Yeah, we're going to move to page 3 of the report, which covers starts with the first open-ended question, question 1.
Okay. The question is, what developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets? Okay, let's go with John first on this one.
Sure. I think that the main thing I'll be watching for is there going to be any follow-through on last week's announcements by the ECB and the People's Bank of China, for the easing. This thing has been all about the Fed all the time, and we can expand that now really to be all about central banks all the time. And I think the big question, everybody's touched on this, will the markets continue to act and believe like the central banks are omnipotent?
Yeah.
Will quantitative easing actually fix the real economies around the world? All these things are happening because the real economies are weakening. You can see it in PMIs last week, a number of global kind of indicators. So you've got this dichotomy here, equities going up based on the Kool-Aid and the adrenaline. Will the adrenaline rush last, and for how long? And I think everybody's saying that, and that's why we're seeing things like the record number of days above the 5-day moving average and no reversion and stuff like that. This is not a market that's based on normal inputs.
Yeah, and I think that you just have to go with it, and you can't fight it.
Yeah.
Before we get to before we move on to Stephen, does anyone here trade currencies?
I was just about to talk about that.
All right. Well, I'll let me let you go, and then I'll chime in if you don't if you haven't read my mind. So, the question number 1 is, what developing events, technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P and other U.S. markets?
One of the major upside catalysts that we saw during this most recent bounce was the introduction of what I call central bank voodoo from the Bank of Japan. And if you look at the dollar-yen cross, it had a very, very large breakout above 110. And we've seen a very highly correlated market. This was very true back in 2013. It was one of the main drivers for the S&P to go higher. A lot of these macro-based institutions, they really don't have a choice. When you see a weekend, you got to put money into risk, and it's one of those correlated assets. So if you want to be bearish on stocks, you're going to need to see the dollar-yen revert. And until we see evidence of that, it's incredibly difficult to be bearish on stocks. So I'd say, if the dollar-yen cross breaks back underneath 117, you might start to see some funds move out of domestic equities and place some capital elsewhere. But that would be sort of the main over-under for me with respect to that relationship. And it has been an incredibly strong relationship over the past month.
Yeah, it's pretty amazing, and that's what I was going to say if somebody didn't bring it up. I saw some headline somewhere that the yen will go down forever, and it's like, no, it won't. At some point, it'll go up. I think that could be the mother of all trades when that yen does turn around. But don't fight it. Just let it go. Wait for some sort of transitional type of setup to occur, emerging trend. Okay. Now we're down to Bennett. Okay, Bennett. And the question is, hope that's not a margin call.
That's a good thing. Yeah, I got it.
Usually when, never answer a margin call. Whenever I'm speaking publicly, if somebody's cell phone rings, I'm like, hey, is that a margin call? Let's see. Okay, what developing events, technical or fundamental, would you be watching out for this week that might have a positive or negative impact on the S&P 500 or other U.S. markets?
Well, I'm pretty much pure price action. I pretty much go with the trend on whatever time frame I'm really looking at. And, I'm really not probably smart enough to figure out what really is behind a trend. And I just go with the price action because that's really all I care about. If it's trending and, it's giving me a signal in the direction that makes sense at that time, my approach, then I go with it, all right? There's always a reason. Sometimes the reasons come out of left field. We never really know for sure. But in terms of watching anything, I mean, you have jobless claims coming out on Wednesday. You have new home sales coming out. You have GDP coming out tomorrow. I don't think any of those are really going to do much to affect the markets because I think they're pretty stable at this point and what people think is going to happen. I think China cutting its rates, okay, adds a little bullishness for the week, okay, in there. And so I just think from a pure price action, the trend is up on one of the time frames I look for really going out for the next week, and I stay with that.
Okay, well, once again, we're not going to get a lot of controversy on this show. Like you, I just look at price and only price. I think the whys come after the fact, and sometimes price leads the way, and then we later find out why the price moved higher. I guess my only concern would be the same concerns that I think all three of us have here is when do we get that reversion to the mean move? My nickname is the trend following moron in the industry because I try to follow the price along and I don't try to justify or explain why it's going up. And maybe after the fact we could have a beer and talk about it. But the fact is, if it's going up, it's going up. It is what it is, and that's when I got dubbed that because somebody was very angry with me and also very short. I think that was in 1999 when everything was going straight up. So that's the only thing that I'm a little concerned about. I think that you need to, if you are a technical trader like most of us here, or you need to trail your stops higher. I think you need to take partial profits as offered. This is not going to be a permanent income hypothesis type of market where it's going to go up forever. But while it's going up, I think we should enjoy the ride and not question it at all. Okay. All right. Let's go to question number 4. And then for that, let's start with John. John, what indicators do you use as a technical trader, and what do you use as a fundamental trader?
Well, technically, I try to keep it simple, but so I use a combination of MACD, RSI, point and figure charting, which is kind of back to Charles Dow's day, and exponential moving averages. Blend those together. I mean, you can get more confidence when you see more things confirming each other. Those are all bullish, as we mentioned. One thing I like to point out about RSI, we don't have a chart here. The markets are way, way overbought. I mean, on every major index, just about every time frame, they're up in the 70s, the RSIs, and typically, as everybody's been talking about, that eventually they can stay overbought for a long time, but eventually does revert to a lower level. Fundamentally, I look for as I mentioned, I'm watching the Fed all the time. Interest rates, all this is going to change sometime whenever the Fed start raising rates. I think that's kind of D-Day for the world. Then fundamentally, are we in a recession? Are we expanding? There's more and more indication there's higher probabilities of recession sometime next year. And then I do the sector rotation. I look at breakouts. Which sectors are strongest? There's always, I think someone famous said there's always a bull market somewhere, and that's true. And so I look at the particular sectors.
Yeah, and I like the work you're doing there because it's fascinating when you see the go-go sectors taking off. You're in a pretty good bull market, and when you start seeing some of these other sectors like utilities or consumer non-durables or anything defensive related, it's time to start getting a little concerned. And as a momentum player myself, I have a hard time trading those other markets. I'd rather just sit aside or maybe short the other ones. Right. But good answer and well thought-provoking answer. Okay, Stephen, let's go to you. And you need me to reread the question?
No, I think I got it. Technical indicators and so on. Before I answer this, it requires a little bit more context. My time frame tends to be, if I get stopped out, it can be a very tight time frame. But my time frame generally isn't more than 2 months out. So when we talk about central banks and monetary policy and all these fundamental events, they really don't drive my trading decisions because I'm usually out of a trade by then. I also do a lot of what I call income trades with options, where I'm looking to make money as long as a particular asset class stays within a certain range, and that's where I make my money. So, the normal kind of trends in technical analysis and price patterns, I do use those, but one that I use a lot is a Bollinger Band, and that's what a volatility this market has been in, or a stock has been in, and it helps you to structure your option trades. So if a Bollinger Band is very, very tight, you want to be a net buyer of options, and if it's been expanding for a while, you want to be a net seller of options, and that helps to dictate the strategy you use and the kind of edge you can get within that. So great example right now is, for example, TLT, which is long-term treasuries. Had a mini flash crash to the upside, and it's been in a very, very tight range for about a month. So I'm looking for volatility expansion here. So I would be along those lines to help give you an idea of the kind of setup I'm looking at.
Okay, so little reversion to the mean, little compression, expansion, and volatility. Looking to play a little decay somewhere in there. Okay. Okay, so a Bollinger Band, you said, works out very nicely with that type of trading. One thing that I heard. That's okay. Cool. All right, let's go over to Bennett. And what indicators do you use as technical trader? Excuse me. And what do you use as a fundamental trader?
Well, primarily, I developed a suite of software studies. So I use those, and they primarily measure momentum in the market. I also look at, as I said, price action. So I'm looking at that specifically for entries and exits and risk control. And then I use Elliott Wave. I do like Elliott Wave, and I like fib retracements and extensions for target zones. So that's kind of where I kind of mix it all together into a structured approach using strict risk control. I think that's real important. So that's pretty much what I do, and I apply that same approach, on each time frame I'm looking at. Depending if it's a day trade, we'll use a shorter term intraday time frame. If it's a more significant trend underway, then I'll use a daily chart, if not higher, if it's a longer term situation. Or if it's a short week, if you have a lot of volatility, then we drop it down to a 60-minute chart and do some short-term swings that way. I think also too, part of the question that says, what do I use as a technical trader and what do you use as a fundamental trader? Now, as a technical trader, I don't put my head in the sand, so to speak, and not pay attention to the overall big picture going on out there. I think a lot of technical traders can tend to do that. I think the fundamentals can steer you to possibly some good markets to look at and apply your technical analysis to. So I think you need to kind of keep an ear on what's out there and what maybe traders may be flocking to, so to speak, and see if there's some trades that may be good setups for your type of style of trading. So we do that. We also do analyst upgrades and go with the ones that are in the direction of the momentum where we want to trade at that point. So that's not a bad way of doing it too. So it's a combination of a lot of different elements, but it's structured. I think that's the best way to say it.
Okay. Sounds good. I guess that's, we could have a little controversy. I might argue with you a little bit on fundamentals, but I like what you said about they might lead you to a market where something technical could be developing. So that makes a lot of sense.
That's all. That's all how we use it. We don't make it. It never is used for decision of a buy or sell. That's all left to technical analysis. Price action.
Okay. Yeah, the greatest fundamentals will only move as much as the technicals will allow, as much as the trend will allow, and I think that's a bastardization of a Greg Morris quote. But basically, if the fundamentals can be great and the market can go down for a long, long time, or vice versa. I'm a pure technical trader. My favorite indicator I just showed you was right here. It's going to be the big arrow. I'm always banging on the ceiling every time. As long as the trend is up, I'm going to be a trend follower. It could go up, down, and sideways. I will occasionally use a moving average, and I use what I call a bow tie moving average. It's 10 simple, a 20 exponential, and a 30 exponential. And I think that indicators don't actually indicate. They tend to illustrate what's actually going on with the market. So if you see moving average rolling over, if you look at price carefully, you're going to see that price has begun to roll over. And sometimes your eye might not catch it. You might get a little bit too full of yourself or a little too bullish or something in a market that you may be long, and you may not see it rolling over. So as far as indicators, the occasional moving average, a 10 simple, a 20 exponential, and 30 exponential. And I look for crossovers there after major highs or major lows. When that yen hits that sub-day, when it hits the major low and starts turning back up, we'll get a signal in those moving averages, and I think that'll be worth watching. But for the most part, just draw arrows on my chart. And the only other thing I'd throw in is I'm short to intermediate term trader. I think you can only predict the short term when it comes to markets, and I think if you look too far out, a lot of stuff could happen between now and then. Okay, let's go ahead and have some closing thoughts from each one of you, and tell us a little bit. Give us your website address one more time, and let's start with John. And any closing thoughts, and then give us your website address, and we'll go on to Stephen and then Bennett.
Yeah, I think
John, you first.
closing thoughts wise, like we've mentioned, the seasonality is bullish. At least I would say through the end of the year. January is a new day, so we'll see what happens there. And I think that we're living. There's no question about this in historic times. They're going to be writing about this period long after we're all gone, and I think we have to be aware of where we are. The website is wallstreetsectorselector.com, and always great to be here. Nice chatting with you guys.
Yeah, and that's a great thing about this panel. I mean, not to get too full of ourselves, but I think people will look back at this and say, "Wow, that these guys saw it coming. They didn't get the timing exactly right about the mother of all turndowns or whatever, but they did see it coming, and they knew things were extraordinary." But I don't think anyone here, just yet at least, is fighting it. All right, Stephen, some closing thoughts from you, and tell us a little bit about, give us your website address one more time, and
Okay.
Go ahead.
What you'll find really interesting in the language that we've been using is that we're all bullish, but it's just like, and it's that kind of reluctance that I think a lot of market participants have that's actually helping to drive this market higher, because you don't really want, from a risk-reward standpoint on a daily chart, it's very difficult to define your risk right here on the S&P to say that getting long here is a good risk-reward trade, but the overall trend is up, so it's difficult to fight the trend. We've been saying tricky, and we've been saying, yes, we want to be bullish, but that's just because of seasonality. It's not that we're saying, oh, I want to get leveraged long and use TNA and some other leveraged ETFs right here. So just recognize the kind of language that we're using, and that's sort of reflective of the overall market psychology that we're seeing right here. Again, my time frame is only 2 months out, so you guys are talking about big downturns and everything. I don't know. We'll see. Maybe there's some more premium that I can sell if that big downturn happens. My website is investingwithoptions.com. I talked briefly about Bollinger Bands. At the very top of my website, there's a free Bollinger Band ebook if you do want to pick that up as well.
Okay. Yeah, it's really interesting. It's like we're all like, we're not fighting it, and we all have the caveats. And I like the way you say that. It's like the reason it's going higher is because I guess we doubt it enough, and that's what's keeping this thing afloat. Yeah. Bennett, closing thoughts, and give us your website address one more time.
Yeah, sure. Well, like you said, you can't fight the trend. The trend is up, and you go with it until it changes. That simple. When it changes, it will price action will clear some key levels of support. Everything we do is probabilities in the market. Nothing certainty. That's why we use risk control. But you go with the trend, and when it changes, you try to do your best to change with it. I think the most difficult time in trading is when that trend does change, because it's not always nice and neat. It can be a little volatile, a little sloppy, and that's, as trend traders, that's where we can tend to give back money to the market. And so I think it's an art really that needs to be learned, and I think we'll all learn it as we continue to trading as well. But I think that's really the most important thing. Don't fight the tape. Okay, you go with the tape, and when the tape changes, change with it. I think that's the best we can do. My website is traderscoach.com, and we have a lot of cool stuff there, for a lot of free information. We also hold a weekly webinar on Wednesdays where we actually have a lot of folks come in and speak to our group. So I just want to throw that invitation out to any of you all here. If you want to come and speak to our group, Jean organizes that. It's done every Wednesday, and we call it Wednesday Night Live. So give her a holler at Jean@traderscoach.com, and she'd be glad to talk to you about that. And they're about an hour long, but it's a super time to get together kind of like this and share some thoughts. So anyway, I want to thank you for having me today. It was great.
We're glad to have you, Bennett. One question I did have, you mentioned earlier you do some Elliott work, and in my experience, at least with my clients, I've seen some do incredibly well when the market is trending and they're not fighting the trend. But it seems like at some point, and this is a very small representative sample, but it seems like at some point they begin to fight the trend a little bit. So in your Elliott work, how do you avoid fighting the trend? Because that's interesting that you said you don't fight the tape. So if the tape is higher, do you ignore the Elliott work if it's calling for a top, or what do you do in those situations?
Well, usually if you're in a trend, you're most likely in wave 3 or 5. Chances are most people don't really, even though wave 1 is technically part of the new trend, it's usually coming off a bottom. And so right then is that area where wave 2 can pull back all the way to the bottom, really to the start of where wave 1 occurred. So it's a little tricky in the beginning. So you want to try to catch wave 3, and so that's where you want to focus. And you know, basically wave 3 is a trend. So you're doing the same type of price action for your entries and exits that you would do on any trend. And so that's what you would do. Now, I look for 2 specific patterns for me to identify setup, so to speak. I will look for an end of a bearish trend and the beginning of a new trend. We saw that on Target. Believe it or not, you're seeing it on a lot of the retail stocks that came down before and then bounced up. So that's always a possibility to find that entry point. But wave 4, at the end of wave 4, wave 3 is pretty easy to spot. If it's clear, it will be straight up. And then wave 4 is usually an ABC correction unless it's complex. So when wave 4 gets within a Fibonacci high probability target zone, and you can see a clear pattern, and some of the indicators we use help identify that, then we look for price action to, again, if it's an uptrend, turn bullish after the wave 4 correction. But we don't enter until price action tells us we have bullishness back in the market. So for somebody not using Elliott Wave, they would probably spot that as a bullish trend beginning anyway. So we just try to get a picture overall of where we are in the Elliott Wave, so when we get to a final top, all right, we kind of have an idea that we may be in an area where the next pullback may not be just a minor pullback. So that's kind of how we use it.
Gotcha. Sounds like the map is not always a territory, and price at the end wins. Again, thank everybody for coming today. Just a quick, for those of you who don't know me, I am a short to intermediate term trader. I'm slotted as a swing trader, but I will hold positions for as long as a position moves in my favor through trailing stops. I have a 21-page report if you guys are interested. Shoot me an email at david@landry.com, and I'll get that out to you on the basics of a methodology. And I do hold a weekly webinar, which is free to join and participate every Thursdays, usually, obviously not this week because of Thanksgiving, but every Thursdays, usually at 11 o'clock Eastern. And I would love to have you guys in there. There's a countdown on my website. I will be hosting this show again if you want to sign up for next week. See the countdown. There's another countdown on my website for Timing Research show. Again, thank everybody for coming to the show today. Thank you so much, David Kosmider, for asking me to return. And David, you want to go ahead and wrap things up?
Yeah, thanks, guys. For everyone who's watching, if you have an idea for question 4 of the survey, which changes each week, you can go to TimingResearch.com/question and submit your suggestion there. Also, be sure to go to TimingResearch.com/current survey before next Sunday afternoon and fill out the next week's or the survey for this week. And I want to thank my guests again, Bennett McDowell of TradersCoach.com and John Nyaradi of WallStreetSectorSelector.com. Both of them were on some of my early shows, so thanks for being back. And Stephen Place of investingwithoptions.com. He's on here for the first time, so thank you. And Dave Landry of DaveLandry.com, my guest host again. And we'll be on again next week, so thanks for continuing to do this.
Thank you, David.
That's it. So thanks, guys.
Thank you.
Thank you very much.
Happy Thanksgiving. Happy holiday.
Oh,
Yeah.
you too. You too,
Yeah,
John.
happy Thanksgiving, David.
Right. Happy Thanksgiving to everyone out there.
Amen. Happy Thanksgiving to you guys too.
Okay. Bye-bye.
Bye, guys.
Bye.